Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so today we're going to talk about if you should buy a house during a recession.
Okay.
We're going to basically talk about the pros and cons. Okay, in simple terms, how do you define a recession? What's the technical definition?
2 consecutive quarters of negative growth.
Negative growth. Okay, it's measured by GDP.
Again, A plus.
Again, A plus. We're going to put up this thing and I'm going to read it because we're going to talk about this. Is the reason we're going to go through this is because there's some specific things you need to understand. Because there's generalities that people talk about with a recession and housing and other things that are not necessarily true in every recession.
Correct. And the thing about, in 2022, first quarter and second quarter, we had negative growth. So if you use that definition of a recession, then last year we had a recession. However, because the job market was really tight, meaning unemployment was low and employers were seeking out employees, the government decided that, well, maybe that's not quite the definition of a recession. So the government says we really didn't have a recession last year.
Okay. So first of all, the reason that's important, they're predicting a recession. They're predicting negative GDP growth, right? Even though we just had a 2.9 quarter and the quarter was full of all of these job losses.
Right.
So Juan is exactly right. The first 2 quarters of 2022 were negative growth. But the government basically said, you know what, we're not going to count that one because, the economy shrunk, but, we had full employment and the markets were going very good and everything. So we'll not count that. But they counted the one in 2020 as a recession. Okay, so that's it. We have a thing on the screen that you can read through and talk and go about that. Okay, now that you know that, the other thing to point out is there's basically only 3 things that are ever happening at one time. One is expansion, economic expansion, what we experience literally 85 to 90% of the time, if not more. Then we have this very small thing called recession. And then if it gets really bad, it becomes a depression. But in a recession, it could be anything from super light to really strong. In the early 80s, we had 2 really strong back-to-backs. We had 2 years of hardcore recession.
Right.
And we've had recessions in the early 90s. And we have, of course, had the great financial crisis, which was a recession that was led by housing. But the thing you have to understand is all recessions are not equal.
No.
Okay.
Okay, so let's start.
Okay. So we'll start with this slide, recessions, the housing market. Okay, an economic recession, we talked about that. During a traditional recession, the Fed will lower interest rates. Okay, it creates incentive for people to spend money, stimulate the economy. The problem is this leading into this recession, potential recession is inflation is causing it.
Right. So what's happening is rather than lowering interest rates, the Fed has been raising interest rates. And that's difficult because as they're raising interest rate, the idea is to cause less of certain types of economic activities. But the unintended consequences, of course, that it can lead to a recession.
It can lead to a recession. Okay. In a recession, the question you ask yourself is, do home prices go down in a recession?
So, I think the jury's still out on that. When we look at historically, that's not the case. Home prices remain strong, and that's not the case. But
except for once.
Yep. So, but it can happen. So, what can be argued is that during a recession, there are people who feel that the economic uncertainty causes them to not want to purchase a home, and the school of thought is that this puts buyers in a better position who are interested in purchasing a home. And it takes power away from sellers. Like we said, we really haven't seen that overall over the past, I think, 6 recessions. That only happened one time.
Yeah, it was the big one. It was the big one. Housing caused that. Okay. So there's this. This is a quote from the article, should I buy a house during a recession? Recessions can often push buyers out of the market. That's only if there's job losses.
Correct.
And even though there were a bunch of tech people that were laid off, the net number of jobs still increased. There's still more total jobs. So you had some people not employed, you have other people employed. The net is really all that matters. The people who lost their jobs, whatever, they can go get other jobs, right?
Right. And the thing is that the tech people who lost their jobs, it's not that we're unsympathetic to their cause, but the thing is that these are skilled people, and skilled people can usually find jobs. And particularly in technology, you don't necessarily have to relocate. You can work over the internet. So these people do have more opportunities than perhaps somebody working in a physical location like a manufacturing plant.
Okay, here's a quote from the article I want to read. When rates go up and demand slows, buyers can usually get a better deal on the home they want. You can always refinance when rates go back down again. Now, that's actually true for this fall. There were a lot of people out there who said, ooh, there's some inventory now. I think I'll go find a house. It's a little cheaper than it was in the fall or in the spring, even though it was more than it was last year, right? But but the rate is a lot higher.
Right.
So were people doing that? Were they using this strategy even though we weren't in a recession?
Right. So the jingle this past fall was, what was it? Marry the house, not the interest rate, something like that.
It was marry the house, date the interest rate.
Yes.
And I forgot who did it. It was one of the influencers on YouTube.
Yes.
Or someone came up with that. It wasn't Kramer, it was one of the other ones. I forgot the guy's name.
Right.
Okay. All right. So that's absolutely true. Let's talk about some of the pros of buying a house during a recession. Less competition, because in theory, the other buyers there's less of them because they all lost their jobs or whatever, even though that's actually not going to happen.
Right. I don't think it's as much that they lost their jobs. I think it's more that the economic uncertainty is causing them to sit on the sidelines because they're anxious about what's happening, and the uncertainty makes people not want to make any changes.
Okay. The reason I'm picking on this article, and if you can tell we're picking on it a little, because they're trying to give you generalities that aren't true. They have lower prices and lower rates as a benefit. If prices are lower, which they historically are not, and rates are lower, which they 100% are during every recession of the last 6, mortgage interest rates have been lower. You would think that would incentivize other people to come in and bid against you, right? Which is likely what's going to happen here. How does that pan out, considering the fact inventory is crashing? We're running out of inventory.
Right. So look, this article is really nice. Everybody can write something, but that doesn't make it true. It used to be that if it was in writing, you could maybe think that it was maybe true, but I think that was a fallacy too.
Yep.
So just because it's out there on the internet doesn't make it true. Just because somebody wrote it doesn't make it true. But data is what we rely on, and the data doesn't support this article.
Data doesn't support it. Here's some cons. They had stricter lending requirements. There was absolutely no evidence that lending requirements get strict. Lending requirements literally don't change. Like, these requirements stay the same for years.
Right.
Whether it's the FICO score, the whatever, it's not like they go, okay, we're in a recession, so the debt to income ratio, instead of being 37, is going to be, 27, or whatever. We're going to change the the credit score now, instead of being 720, 760. They literally don't change the requirements just because the government said we use the word recession.
No, the requirements actually change as a result of things that actually happened in the mortgage market. So, for example, the requirements became more stringent after the real estate crash, because the loans that they had made were not based on sound economic factors. So that they revisited that and said, hey, look, let's look at borrowers, and let's look at what makes for a strong borrower, and make the lending requirements more stringent, so that we don't have to go through this again, where people are involved in loans that they can't afford to pay back.
One of the things it said is fewer options available. With less competition, lower prices, some sellers will take their home off the market or opt to wait it out, leaving less available inventory for buyers to choose from. That's actually happening right now, even though we're not in a recession. Like, people have just said, you know what, I'm gonna, not gonna sell my house and move. I'm just gonna stay in place.
Right. So we're not in a recession. That is happening, but it's happening for other reasons. It's happening because they also don't have choices on the other end. So if they sell their home, they don't have a lot of choices for their next home. So that's causing them to not want to sell their home. The other reason is because, maybe they have a 2.5% interest rate on their home, and they don't want to go out on the open market and have to pay 5 3/4, 6% for their next loan. So that's another thing that is a consideration for people. and causing them to not put their homes on the market.
And then the last one's economic uncertainty. It says typically many people lose their jobs during a recession. That absolutely not the case. Your word many, I think, is misleading. The worst case scenario in a really bad recession is unemployment goes up a couple percent. So if it goes up 2%, that's 1 in 50 people lose their jobs. 1 in 50 people not in the housing market is welcomed. It's going to, people this spring are going to wish that half the people weren't out there trying to buy a house. The other thing that I thought was interesting, it says, important during a period of economic instability, and having your cash tied up in real estate might not be ideal. I think people that have their cash tied up in real estate for the most part have been pretty happy, especially the last couple of years, where the stock market, cryptocurrencies, and all these other asset classes have been really, you've lost wealth. And having you, like, it hasn't been bad enough to where you've needed to have all this liquid cash. You should never, ever just not have cash. You should always have at least 6 to 8 months, right?
Right. So, my philosophy is that when you go out to purchase a home, after you've paid for your down payment, closing costs, and everything else related to the purchase of the home, including your move, you should have 6 to 8 months of savings so that if some catastrophic event happens, you can still make your mortgage payment, you can still live until you can get back on your feet.
Here's the bottom line. This is also extremely general. This is buying a home during a recession can sometimes be a good idea, but only for people who are lucky enough to remain financially stable. Mortgage rates may drop as the Fed tries to help the economy recover. With fewer qualified buyers, less competition, house prices could drop as well. Not true. For the last 6, home prices have gone up. However, there's still plenty of risk during economic downturn, particularly with the possibility of widespread layoffs. Or when they say widespread layoffs, that I think there's this general consensus that people remember what happened in the early 80s and then the early 90s when it was, there were just, the economy was kind of having a hard time. And that has not, great financial crisis was another one. But we're talking 3 times, and nobody is predicting. The consensus right now is it's now 63%. There's 63% of a chance of a recession. And remember, we had already had a recession, and they said it wasn't a recession. So there's 63% chance we could have a recession, but at the end of it, they could say there's probably like a 40% chance that they could say, oh, that wasn't a recession. So then you have to, that's like the over-under.
Right. So look, a 63 to me is pretty close to 50. So toss a coin, recession, not recession. That's not enough for me to base my decisions on. But everybody's situation is different. So consider your particular situation and how all of this impacts you.
And we're not trying to say you should run out and buy a house.
No, we're not suggesting that.
Yeah, we're not saying that at all. Don't get us wrong, okay? We already said that you missed, the time to buy a house was any time in the past, and if you didn't buy a house 10 years ago, 5 years ago, then you probably have already missed out, and the interest rates you missed out on. But all we're trying to say is, don't base your decision based on generalities. Decision needs to be based on what your needs are, what your financial situation is. Between 4 and 5 million people will probably end up buying a house this year. It'll be less than the average, but a lot of people will still buy houses, and people will sell houses.
Right. And the reason that we're not going to sell more houses this year is because there will not be more houses to sell.
Yeah.
All right. So what do you guys think? Does this make sense to you? What's your take on the whole thing? Leave us a comment and tell us what you think. Tell us where you're watching from. We like listening and learning from you. Give us suggestions for future videos. We appreciate that. If you liked the video, if we entertained you, if it was something interesting, please like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.